Good afternoon, everyone, and thank you for joining us today. My name is Christina Rose, Director of Strategic Alliances at Foundation Source, and I will be facilitating today's webinar discussing how foundations can provide emergency grants to individuals. Before we get started, I want to first send best wishes to you, your families, and your communities. We are in the midst of a challenging time in the U.S. and around the world, and I know we are all seeking out ways to be of service. For anyone not familiar with our firm, Foundation Source is the nation's largest provider of comprehensive support services for private foundations. Our services include administrative support, active compliance monitoring, tax and legal expertise, online foundation management tools, and philanthropic advisory services. Our speakers today are Jeffrey Haskell, Chief Legal Officer, and Paige Snow, Chief Philanthropic and Marketing Officer. A few points to note before I turn it over to Paige and Jeff. First, a quick word about Wi-Fi and phone connections. Probably like most of you, we are currently working remotely under stay-at-home orders. Jeff is presenting from his home in Long Island, New York, and Paige and I are in Fairfield, Connecticut. We don't anticipate any technical issues during the broadcast, but if one of us loses connection, just know that we will quickly get it resolved and resume the webinar. If you were experiencing problems, you can try exiting and then rejoining the broadcast. Also, audio may be better via phone than on your computer. It will also reduce some strain on your Wi-Fi connection. Questions can be submitted at any time via the GoToWebinar dashboard on your screen. We will be leaving some time at the end of today's presentation to address your questions. If we do not have time to answer all your questions, please know that we will follow up with you directly after the webinar. And now, it is my pleasure to introduce my colleagues. Chief Legal Officer Jeffrey Haskell has been with Foundation Source since its founding in 2000. Together with a team of attorneys, accountants, and support professionals, he provides tax reporting services and guidance on legal and tax issues to Foundation Source clients and their advisors. Jeff is a frequent speaker on the rules and regulations pertaining to private foundations, and his articles have appeared in several trust and estate and law review publications. Prior to Foundation Source, Jeff was an associate in the tax and trust and estate departments at two law firms. He is a graduate of the Benjamin N. Cardozo School of Law and holds a Master's of Law in Taxation from New York University School of Law. He is a member of both the Cardozo Law Review and the NYU Tax Law Review. Paige Snow heads up Foundation Source's team of philanthropic advisors. Prior to joining Foundation Source in 2002, Paige spent over 10 years with the Pew Charitable Trust. She was named one of the 50 most influential women in private wealth by Private Asset Management magazine and is frequently quoted in both popular and philanthropic press. Paige and her team provide guidance to Foundation Source clients on all aspects of their charitable giving. She holds a Bachelor of Arts degree from Sarah Lawrence College and a Master's from the University of Pennsylvania. And with that, Paige, I turn it over to you.
Well, thank you for the very nice introduction, Christy, and thank all of you who are attending today's webinar. So today, Jeff Haskell and I are going to talk about making grants to individuals with a focus on emergency assistance in light of our global pandemic. And given that over 600 people signed up for this webinar, this clearly is a topic of great interest to many of you, and for good reason. Providing emergency support may be one of the most important ways that private foundations can make a difference to people who are impacted by the current crisis, whether they suddenly find themselves out of work or have onerous medical bills or are suffering from the physical or emotional impact of COVID-19. So let's go over today's agenda. Although we will not provide legal or accounting advice in this presentation, we do want to share the practical experience we've gained over the last 20 years helping our clients make grants to individuals. We'll go over the rules that you need to understand if you want to make these types of grants yourself. We're also going to discuss the particular circumstances right now that enable corporate foundations to provide support both to people in their community as well as to their own employees. And later on, Jeff is going to explain the special rules that corporate foundations need to follow if they want to provide disaster relief to their employees. At Foundation Source, we've developed streamlined procedures to help our clients remain compliant with IRS regulations when they make these grants. And at the end of the presentation, Christy's going to let you know how you can get a copy of the COVID-19 emergency assistance form that we've developed for our clients, which you can adapt for your own use. But before we get into the nuances of how to make these grants, let's first start with the big picture. So making these grants, it's important to understand that there are two basic types of grants to individuals: those that require advance approval from the IRS and those that don't. Those that do require advance approval would be grants for research, travel, study, or similar purposes, typically scholarship or fellowship grants. These grants have strings attached in that certain conditions are expected of the recipients of these grants, whether that condition is academic progress, a research project, or teaching a particular course. Now, if you want to provide scholarship or fellowship grants and choose the recipients yourself, you must first apply to the IRS and get their advance approval before making these types of grants. The second category of grants to individuals are those that don't require advance approval. And that's what we're going to focus mainly on today. These types of grants to individuals are usually aimed at relieving human suffering, such as for disaster relief, medical emergency, or hardship assistance. Now, these grants do not have strings attached in that the recipients can use your support for whatever they want. And we're going to talk more about that later. So with the understanding that you do not have to apply to the IRS for advance approval in order to make emergency grants, I'm going to hand it over to Jeff to give us a little history and background on grants to individuals.
Thanks, Paige. Grants to individuals out of a private foundation have been allowed for some time now, but the IRS hasn't provided safe haven approaches for making such grants in a compliant way. Guidance for making these types of grants, like how to ascertain need, how much can be given, and the like, is sparse. In fact, the only example given in the regulations involves making a grant to indigent individuals to enable them to buy furniture. And while the example illustrates that making grants to needy individuals is permitted, it sheds no light whatsoever on the process for doing so. Many clients and advisors don't know that it's even possible for foundations to make grants to individuals, and many of those who do know it's possible avoid making such grants because of a fear that it'll be second-guessed by the IRS. And that fear is understandable, because a grant to an individual that doesn't comply with the IRS rules could subject the foundation to a taxable expenditure penalty of 20%. There's also a great deal of confusion regarding whether a disaster or hardship relief program would require advance IRS approval at all. Well, shortly after 9/11, nearly 20 years ago, Foundation Source set out to design a form with built-in guidance and a framework for making needs-based assessments that would satisfy the applicable record-keeping requirements that we'll get to a bit later. And we used IRS Publication 3833, other IRS guidance, and informal and unofficial consultations with then senior members of the IRS's exempt organizations technical group as a springboard for the application.
Now, as Jeff has pointed out, we've been helping our clients make grants to individuals for many years. In fact, since 2003, our clients have distributed nearly $5 million in grants to individuals, which is pretty substantial considering that our clients' average grant size was approximately $2,200. And we're proud to report that since our clients started making these grants, they've assisted over 2,100 households. So let's talk about why foundations would want to make grants to individuals directly instead of giving those funds to a public charity. Over the years, clients have told us of the many advantages they've experienced in making these grants. They say that making these grants directly allows their foundation to control exactly who will receive aid. When you grant to a public charity, you're essentially outsourcing the selection process to that organization. It's also enabled our clients to have an immediate and direct impact with their support. They can get their support where it's needed faster because they're effectively bypassing any sort of middleman. When funding a nonprofit in a disaster, sometimes there's a question whether that organization actually has boots on the ground. Foundations sometimes can have greater certainty that their funds are going directly to those in need when making disaster relief themselves. Even if there is a public charity already operating on the ground, a foundation may not agree with that organization's selection criteria and prefer to apply its own. Or maybe that organization has high administrative costs and the foundation wants to make sure that all their charitable dollars are going directly to that disaster or emergency. Or perhaps nonprofits working in the area are stretched too thin to be able to provide the type or extent of assistance that's needed. So your foundation can fill in the gaps. So if you've concluded that in certain instances, you'd prefer to get into the trenches and select grant recipients yourself, I'm going to pass it on to Jeff, who'll go over the threshold requirements that are entailed in making these grants.
Well, first things first. The first order of business is to review the foundation's charter documents, like its bylaws or its trust instrument, to make sure that there's no prohibition in there against grant making to individuals. For example, a foundation's bylaws may require that the foundation make grants only to public charities, or that it may make grants only for a specified purpose, like researching environmentally friendly energy alternatives. And while that would certainly be a charitable purpose, that would be inconsistent with providing disaster relief to individuals. So now let's get down to the actual requirements for a compliant grants individuals program. So what requirements are universal, whether advance approval is needed or not? So as we go through the universal requirements, as Paige noted, we'll be providing examples involving disaster relief. First, we have a grant must be made to an individual to further a purpose that's recognized by the IRS as charitable, because what you or I might consider charitable is not necessarily considered by the IRS as charitable. But the alleviation of human suffering is in fact one of a number of such recognized charitable purposes, and distress grants fulfill this requirement because they are made to alleviate human suffering. Next, insiders, known as self-dealers, are not allowed to reap a financial benefit from their foundations. If they do, they're personally subject to tax penalties and have to file special penalty returns. Insiders include those who run the foundation, such as the foundation's directors, officers, trustees, substantial contributors, and the family members of all such persons. The group of people who are eligible to receive a grant from the foundation constitute its charitable class. This class must be large enough or sufficiently open-ended to ensure that the number of people in the class cannot be reduced to a fixed list. For example, a program offering relief only to the COVID-19 patients presently admitted to a specific hospital would not be open-ended, because I could take out a pad of paper and a pen and make a list of all the people in that class. However, the present and future COVID-19 patients located in a defined geographical area, like Fairfield County, would be an open-ended class because it's impossible to predict now who in Fairfield County will become infected with this virus and eventually be added to the class. In fact, disaster relief programs are often designed that way, to offer relief not only to the victims of a specified disaster, but also to victims of future disasters. And that was commonly the case with various 9/11 funds. They were designed this way to ensure an open-ended, broad charitable class. Well, is there a concern that the class won't be considered broad enough if a foundation's annual budget allows for only a handful of disaster relief grants per year? Well, no, that would be fine. A low volume of disaster relief grants made by a foundation doesn't necessarily imply the lack of a broad charitable class. Rather, it's important to ensure that a large enough group of people are eligible to receive such grants. And a common question that's asked is, can the foundation make grants to people known to those running the foundation, like the trustee's gardener, housekeeper, etc., as well as to those they don't know? Well, as long as such individuals are not disqualified persons, the foundation may make such grants. However, if the foundation makes only a few grants per year, some may doubt that the class of eligible grant recipients was ever really broad enough to begin with. That's why, if a foundation makes only a few grants, it's far preferable to make at least some, if not most or all of the grants, to individuals who are not personally known to the foundation's managers beforehand. Another question we have is, can a foundation make grants only to people who are known to those serving on the foundation? And the answer there is generally no, because that would be a fixed group of individuals, not a charitable class. I could come up again, my handy pad of paper and a pen, and write down all the people I know. Be a lot of people, but it would be a fixed class. But if you make grants to those you know as well as people you don't, that would make the class open-ended. And also, out of sheer fairness, granting to people outside of the foundation manager's immediate social sphere levels the playing field. Therefore, establishing a referral channel, like social workers, clergymen, healthcare providers, those likely to be faced with a constant flow of people in need, is ideal, because it helps ensure that the charitable class is open-ended. Suppose that a foundation lacks sufficient resources to help everyone who's affected by a disaster. In that case, the foundation will need to perform triage. It will need to make decisions about providing disaster relief to some individuals over others. And to do that, the foundation must develop criteria to winnow down the entire group of those eligible to receive help to just those that the foundation really selects. The catch is that the criteria applied to do this must be related to the purpose of the grant. So, for instance, a foundation can't decide to make disaster relief grants only to people with blue eyes because that criterion isn't related to the purpose of such grants, to alleviate human suffering. However, selecting only the neediest individuals for assistance would in fact relate to the grant's purpose of alleviating human suffering. Now, when selecting grant recipients, it's also essential to ensure that this is done in a fair and an even-handed way. And this rule is intended to preclude discrimination against groups that have been subject to prejudice in the past. Therefore, a foundation may not discriminate against people on the basis of gender, race, religion, sexual orientation, and the like. The IRS also requires the foundation to record, among other things, the name and address of each recipient, the grant amount, the purpose of the grant, how the foundation became aware of the recipient's needs, including the identity of any referral source, the criterion or criteria applied to select the grant recipient over others. And in the context of disaster relief, that would include recording the grant recipient's severity of need, and the lack of relationship between the grant recipient and those serving on and funding the foundation and their family members.
Okay, so now that Jeff's gone over the general rules for making grants to individuals, I'm going to talk specifically about emergency assistance. Emergency assistance can be given to people who are experiencing some sort of life-altering catastrophe, tragedy, or natural disaster that has rendered them unable to meet their basic needs. It could be a hurricane, physical abuse, a violent crime, or in the present situation, the hardship experienced as a result of COVID-19. It's important to note that eligibility for emergency assistance is based on the urgency of the recipient's need, not on their financial situation. In an emergency, everybody's equal. The income or net worth of the recipient isn't relevant. And as these grants are not based on financial need, the IRS doesn't require income or asset verification of the recipient. That individual just needs to be temporarily lack the resources to be self-sufficient as a result of the emergency. On this point, it's important to keep in mind that emergency assistance grants can't be given to anybody just because they're victims of a disaster. The decision to provide this funding has to be based on an objective evaluation of each person's needs at the time the grant is made, along with the factors that influence your foundation to select one person over another. For this reason, only people with an actual assessed need can be given emergency assistance. For example, you can't provide support to anyone who lives in the United States simply because President Trump declared the coronavirus a national disaster. Not only should you assess each recipient's relative need for assistance at the time of the grant, but the amount of your grant should also take into account the applicant's level of need. Now, in making an emergency assistance grant, you cannot stipulate precisely how you want the recipient to use your funds. And as we said at the beginning, you have to provide no strings attached funding. Recipients can use emergency funds to cover whatever they view to be their most pressing needs, whether that's food, clothing, transportation, professional counseling, whatever. If the recipient happens to use your money to buy a carbon fiber racing bike instead, there's nothing you can do. There's no requirement that your foundation track how your grant recipient spent your emergency funding. Now, emergency assistance don't only have to be cash. You can also provide in-kind support. And in a nod to practicality, the IRS doesn't expect the same degree of record keeping for any sort of in-kind support you provide in the middle of a disaster. For example, if your foundation hands out bottled water, blankets, masks, medical supplies, you're not expected to record the name of every single recipient. Rather, you should just maintain a simple journal recording the date, time, location, the approximate number of people you helped. And here we've provided an example of what your journal entry might look like. Okay. Next slide. So, as I'm sure you all are aware, the IRS requires foundations to make its annual tax return open to public inspection. Keep in mind, though, that on this return, your foundation is also required to disclose each of your grant recipients' identity, their address, the grant amount, and a description of the grant purpose. So that's some of the requirements for foundations making emergency grants. Jeff, can you go over the special rules that apply to corporate foundations when they're making employee-sponsored disaster relief?
Sure. So to be clear, we're talking about a scenario where a for-profit company, say Acme Co., has set up and funded a private foundation, the Acme Foundation. Suppose that the foundation wishes to assist the employees of the Acme Co. who need assistance following a qualified disaster. Well, in this case, due to their special relationship, Acme Co. itself would be considered an insider, a disqualified person with respect to the foundation, because a disqualified person doesn't have to be only an individual, it could also be an entity. As a general matter, an insider is not allowed to benefit from its foundation's assets. So although the employees themselves are not automatically tagged disqualified persons just because they're employed by Acme Co., there are other concerns. Would such grants result in violations because they would use the foundation's assets to enhance Acme Co.'s ability to recruit and retain employees, or relieve Acme Co. of a legal obligation to its employees, or represent taxable compensation to the grant recipients, or would not be considered as made for an IRS-recognized charitable purpose? While such disaster relief grants as the ones that we're contemplating would be allowed, but only under narrow circumstances. First, such grants must be made in connection with, and as a direct result of, a qualified disaster, as that term is defined in Internal Revenue Code, Section 139. What I mean by a direct result of is, for example, let's say you have Bob Jones, and Bob Jones is in an area that's declared a national disaster. In a case like that, Suppose Bob Jones has his house destroyed or suffers some other sort of emergency setback and needs assistance. So that would be perfectly viable, again, if it's a qualified disaster, and that's the reason for the help. But if Bob Jones happens to reside in that area where there's a qualified disaster, and for whatever reason needs to fly out of the country to attend a close relative's funeral, that would be a problem because the funeral wouldn't be a disaster stemming directly from the qualified disaster. So Code Section 139 tells us that a qualified disaster results from terrorist or military actions, results from an accident involving a common carrier, or is a presidentially declared disaster, or is an event that the Secretary of the Treasury determines is catastrophic. As discussed earlier, all the universal requirements that we've covered before for grants individuals, such as the presence of a broad charitable class and a prohibition of making grants to disqualified persons, apply here as well. But in addition, the Foundation's disaster relief program must satisfy several special requirements. First, the disaster relief program can't relieve the sponsoring company, Acme Co. in our example, of any legal obligation, such as an obligation it may have under a collective bargaining agreement or a written plan that provides insurance benefits. Also, the sponsoring company cannot use the program to recruit employees, to induce employees to continue their employment, or to otherwise follow a course of action sought by the company. And the selection committee must be made composed of an independent selection committee. And the members of that committee and their family members cannot be eligible themselves to receive disaster relief grants. The selection committee will be considered independent only if a majority of the committee members consists of persons who are not in the position to exercise substantial influence over the affairs of the employer, your Acme Co. And finally, in this context, the Foundation should record the lack of relationship between the selection committee members and the grant recipients, and record the composition of the selection committee, and ideally, document the panel's independence. If these requirements are all satisfied, then the Foundation's disaster relief grants will not be treated as taxable compensation to the grant recipient, not result in a self-dealing violation or a taxable expenditure violation, and be treated as a qualifying distribution by the granting foundation, meaning that the grant amount would be counted towards meeting the Foundation's annual 5% minimum payout requirement. Over to you, Paige.
Thank you, Jeff. Thank you very much. So I think we've gotten quite a few really good questions. The first one is, what is the maximum amount that a foundation can give for emergency assistance?
So while there's no specified maximum amount in the regulations, because I showed all of you what little the IRS regulations have to say about it, there's a general understanding that the more that you give, the greater the requirement to perform a more in-depth due diligence. And considering the scope of the due diligence in the form itself, we were, well, at least I was unofficially advised to keep it relatively low, say under $5,000 or no more than $5,000.
Okay, good. Another question, how long after the disaster can we continue to provide emergency grants?
So while there's no specific timeline in the regulations either, depending on the nature of the grant and in the context of an emergency grant, where there's a sudden pressing need, you would expect the funds to be distributed within a reasonable time frame following the disaster. So if there is some sort of emergency disaster, it would follow that a person who is unable to provide for their basic necessities would expect to receive the funds or need the funds, within a few weeks or months of the emergency, not, a year later or many, many months later. On the other hand, if there's a more chronic long-term need, then perhaps a different kind of assistance, like long-term hardship assistance, would be more suitable, which would be based on an assessment at that time, not only of need, but financial need, because the pressing nature of the need would have abated.
Got it. Another person is asking whether grants to relieve human suffering can be made to non-U.S. recipients.
So I think the IRS has made pretty clear that would be okay. I just want to be cautious about this in the sense that the type of emergency grants that were based, where we've been discussing this afternoon, have to do with a sudden pressing need, and so they're not based on a financial assessment, as you discussed, Paige, earlier. They're based on the severity of need. So since it's not based on finances, need is need, whether it's in the U.S. or offshore. On the other hand, if it's a more long-term or chronic need, you've gone past the first blush of the emergency, and now there's an ongoing need. So at that point, most likely a financial assessment would need to be made. And the U.S. limitation that we have here, of up to $5,000, is suitable for the U.S., but may not be suitable for a foreign country. So $5,000 in India, for example, may be a whole lot more than $5,000 in the U.S. So in terms of what would be appropriate for need in a foreign country, a financial need, that's something that would have to be taken and evaluated on a case-by-case basis. In the context of the employer-sponsored disaster relief, that could be tricky as well, because remember, it has to be a qualified disaster declared by the president, and typically the president wouldn't be declaring a disaster in a foreign country. He or she would be declaring only a domestic qualified disaster. So that could be a problem for making employer-sponsored disaster relief payments offshore.
Internationally, okay. Another question somebody asked, in a moment of extreme disaster relief like this pandemic and economic downfall, is there any flexibility for extending beyond your bylaws and charter? Not sure whether we can answer that.
Well, in some cases, it may be possible to amend a foundation's charter documents, and we have many foundations over the last 20 years that have done so from time to time with the assistance of counsel. On the other hand, sometimes those very instruments have provisions that prohibit changing things like purpose. So I would say that on a case-by-case basis, a foundation that would be interested in making such changes to consult their counsel.
Okay. Another question is, can your grant purpose be open-ended while limited to COVID-19, or does it have to include other diseases?
I think the ideal here would be to be victims of COVID-19 and future diseases as well. In fact, there are cases of foundations that were formed to find a cure for polio, for example, and other diseases, which is fortunate for those organizations because eventually a cure was found and a vaccine for polio. And now the foundation in that case was able to redirect its resources towards finding a cure for some other disease. Nonetheless, unquestionably, the victims of COVID-19 are an extremely large class in the hundreds of thousands and also open-ended. So while technically it may be limited possibly to COVID-19, probably the good form here would be to make it for victims of COVID-19 first and foremost, and potential victims of future diseases or other disasters. I think that'll be the right response.
Okay. Another person asked whether a grant from a private foundation to an individual is taxable income.
Okay, so normally when a foundation makes a hardship grant to an individual, we're not talking about the employer-sponsored disaster relief. It would not be taxable to the individual, be considered a gift, and gifts are not includable in income. In the context of an employee-sponsored disaster relief program, as I showed earlier, provided that all the special requirements are satisfied, it would normally, the IRS has indicated that would not be treated as compensation even in that case.
Okay. Another person asked, how does this work with undocumented individuals?
So I think a foundation would need to do its best to try to remember the foundation is not necessarily having to file its records with the IRS. However, I think that just as the foundation may have relaxed record-keeping requirements in the wake of a disaster where they're handing out supplies and you would be making journal entries, I think that human suffering is human suffering. So if a foundation can make a grant to an individual abroad who is not a U.S. citizen, the foundation should be able to make a grant in the U.S. As well, even if the person is not a U.S. citizen.
Okay. And there's a similar question, which is, what if you're giving to somebody with a protected identity that can't be listed publicly?
Well, again, the only guidance the IRS has provided on this is that while on the one hand, the foundation is expected to file its return and to indicate the name and address of people that it's helped, there are exceptions, such as where the foundation is giving out a lot of things like masks and bottled water, and blankets and supplies in the wake of a disaster, and also for indigent folks. This is the language of the IRS instructions, not mine. When the grant amount is less than $1,000. So if it's a case where the person, for example, would fit the IRS's characterization of being indigent, and it would be no more than $1,000, the foundation should not have to list that person.
Okay. And a similar question, which you sort of answered, which is whether you need to send a 1099 to the person receiving a grant.
Well, no, because it's a gift. So
right.
Again, 1099 is used to report compensation for services rendered. There's no services rendered. This is a grant made for purely altruistic purposes. There's no strings attached, as you yourself said. So there's no reason to 1099 the recipient.
All right. And another person wanted a little bit more clarity regarding the independent selection committee. They're asking whether selected employees who are not members of the board of the foundations could be considered independent.
Well, again, the idea here is we're talking about independent of the sponsoring company, right? That they're unable to exert substantial influence over the affairs here, for example, of Acme Co. That's really the issue, not whether or not they have influence over the foundation, but over the sponsoring company. Again, Acme Co.
And one person is asking whether GoFundMe donations qualify as emergency grants to individuals.
Out of a foundation, so I'd be very concerned about there having been assessments, or Paige, you could say what you think.
Yeah, no, I would not make those grants out of the foundation. I would make those individually.
Agreed.
There's a question about the 5,000 max that you cited. They're wondering if it's per person or per family. They want to know whether the husband and wife each could get $5,000, and what about the children?
Yeah. So again, when I spoke about the parameters of the program nearly 20 years ago with the then chief of exempt organizations, Tech, the approach that we took, and that's taken in the forms that we produce, is to view the household as a single economic unit. So in the context of a hardship assistance where there's an evaluation of financial need, you would pool, for example, all the resources, the income of the household. In the context of emergency assistance, again, it would be for the household. So it wouldn't be appropriate if there are 5 people in the household to have each one apply and each one get $5,000 and give therefore $25,000 to a single household. That really is one economic unit. So the expectation was no, it would be per household, not per person in the household.
And a question about the charitable class. Could a charitable class be people who live in apartments in a particular geographic location, which includes apartments that the donor to the foundation owns? I guess that's two questions.
Yeah, I mean, that's a more complicated question that maybe we could take offline.
Can we take it offline?
I guess yeah, I think that would be an appropriate offline question.
Okay. If you want to provide, grants to your employees, is that a large enough charitable class?
So again, if it's to current and future employees of disasters, right, not limiting a program to victims of, for example, COVID-19, but to allow for future disasters as well, even though you might be able to reduce to a list all the people who are employees today, unless you're a profit, you won't be able to reduce that list to all future employees as well who might suffer from disasters. So typically that's the way that's handled. When the number of people absolute is not large, then you rely on the fact that the class is indefinite or open-ended.
One person is asking whether these grants could be used to provide hazard pay for healthcare workers. Ostensibly somebody who's subject to, potentially getting the virus.
Again, potentially, there are a lot of factors here. I don't want to give a blanket answer. I suppose it's conceivable if, in fact, there's an assessment of need that these workers, in fact, need help of some sort. So again, as you said yourself earlier, Paige, there must be an assessment of need. So to the extent that you have a charitable class of healthcare workers who have some sort of need, that potentially should be fine.
Okay. Another question, are there types of grants that a company-sponsored foundation could make for its suppliers and distributors to help them?
I think that there's a similar set of concerns. To the extent that there's a concern about a foundation's assets being used to induce loyalty or to recruit employees, there might be a similar concern about using the foundation's assets to secure loyalty, perhaps, or goodwill with certain suppliers. I'm not saying that it's impossible or that it's problematic. I'd say I'd be concerned. I don't know that I've seen the IRS give specific guidance on that point, so it's something that would probably need to be looked into on a case-by-case basis.
All right. Another person says that he or she owns a car dealership and has a private foundation, wants to know that people who receive funds from the foundation's emergency fund can use them to buy cars from that dealership. What if people who receive funds from the foundation emergency funds use them to buy cars from my dealership?
Well, again, you want to say something, Paige? Go ahead. Why don't you answer?
No, I was just going to say that, well, first of all, you can't stipulate the purpose of the grant anyway, but, I think any sort of inducement like that, the optics aren't very good.
Yeah, I would agree, and especially if there's any kind of pattern there where you see commonly people receiving grants and using it to buy cars from the foundation, the principals of the foundation that made the grant. So I could see the IRS and perhaps other authorities being looking at that with a degree of scrutiny.
I don't know if we can answer this question, but I'll just put it out there. It isn't always possible to send a check to a victim. Is there a way to provide relief in cash using something like Venmo?
Well, the regulations don't specify any specific mechanism of how you get the assistance to the individuals. Some foundations might give out a cash card. Some foundations might work with a third-party charity or other organization with boots on the ground to actually deliver the assistance. I suppose that something like Venmo might be possible, again, assuming that all the record-keeping rules are set, and all the other requirements are satisfied.
Okay. Here's a question. Is it an option to pay rent directly to an individual's landlord? If so, is the landlord listed on the 990 PF or the individual?
So in theory, something like that might be possible, because again, you're really in a case like that, you're typically making a grant to the individual, and the individual is saying, "Look, I'm late on my rent, or I can't pay my rent," and where I really need the help is to get money over to the landlord. So I would recommend, again, everyone would speak to their own advisor or counsel, but I would recommend getting something in writing from the actual grant recipient, whereby they acknowledge that they're the ones who are the ones receiving the gift, and that out of convenience for them, they are requesting the foundation to cut the check directly to the order of the landlord, and again, acknowledging that even though the check is being cut to the landlord, the foundation will be reporting the grant as a grant to that individual, not to the landlord, because ultimately that's really no different from a check cut to the order of the grant recipient is no different from cutting a check to the grant recipient and having the grant recipient endorse the check over to the landlord versus having the foundation just do so directly at the request of the grant recipient. Hopefully that's clear.
Okay. Could emergency grants count towards excess qualifying carryover distribution for up to 5 years?
Yeah, as we said earlier, again, provided that all these requirements are satisfied, certainly a grant to an individual would count just like a grant to a charity as a qualifying distribution, meaning that it would count towards meeting the foundation's 5% payout requirement, and where the excess grant carryover that comes into play is if the foundation grants more than it strictly needs to and grants so much in excess of what it needed to do, that the excess is banked, as it were, carried forward for up to 5 years to offset future payout requirements. So the answer is yes, it could be.
Okay, another person wondered if the everything that you talked about, employer-sponsored donations, would apply to a small business owner.
So a small business owner, in theory, like anyone else, could be the victim of a disaster and unable to care for their basic needs and need help like like anyone else as an individual, as opposed to making a grant to the person's business, which is extremely complicated in an offline discussion.
Okay. If a corporation has already established a foundation that's been active for many years in other charitable areas, could they simply set aside a separate pool of funds with the required assessment process and selection committee?
Yeah, so again, as I said earlier, I recommend the Foundation's board reviewing its bylaws. If it needs counsel's help, then fine, just to make sure that something like that would be permitted. And again, assuming that it is permitted and that the corporation doesn't already have existing obligations under collective bargaining agreements or otherwise to help its own employees who suffer from a disaster, then in theory the foundation, I don't see why the foundation could do such a thing. Presumably they'd want to do this properly by having a board meeting and formally adopting a program and laying out what that program exactly is and how it works and et cetera, and then thereafter have that program in hand and follow it. So I assume it should be okay if everything is done in accordance with the rules and assuming that there's no other problem with the bylaws.
Now, here's a question. Wouldn't an employee-sponsored giving to a class of current and future employees be an unfair recruiting benefit for the company?
Well, I mean, it could be. And in fact, at one point, the IRS, I think in the 1990s, had some letter rulings that allowed it. And then at some point, it retracted this and said, no, it's an unfair, not only an unfair advantage, it's an inappropriate use of foundation assets to benefit the sponsoring company. It was only after 9/11 that legislation was passed that said that in the context of Section 139 that I alluded to earlier, would it be possible? So a foundation can't normally provide disaster relief payments if a person's home is burnt down, God forbid, or some other tragedy occurs. It's only in the context of a qualified disaster that it will be permitted, and again, provided that all these other requirements are satisfied.
You answered this, but I think we should clarify it. Should grants to individuals apply towards a private foundation's minimum distribution requirement?
Yes. Again, they are considered grants. They're gifts. That's why they were excluded from the recipient's income, and they count the same way a grant would count, for example, to a church or to a museum or a university. They count the same way towards meeting the payout requirement.
Okay. And here's a question. You may want to take this offline, but could a foundation provide financial support to a group of small businesses if they fall within a charitable class?
Yeah, that's really a very complicated question. The IRS has very nuanced positions on this. It's very fact sensitive. It might be conceivable, but would require the involvement of counsel to help make the evaluation and make sure that any special requirements are satisfied. So it's not impossible, but the assistance of counsel would be needed to make sure that it would be viable under the facts of a particular case, and even if it is, to make sure that the necessary terms are in the various documents, whether it be a loan or grant or otherwise.
Okay. Another question is whether foundation funds could be used to purchase food vouchers at a specific grocery store and then give those vouchers to individuals in need.
So assuming that the foundation, in fact, makes a needs-based assessment and keeps the appropriate records and has a broad charitable class, then in lieu of providing a check, I don't see why a foundation could provide a voucher. Because, again, even though that might be in some ways a string, it's not a string for travel, study, or similar purposes. So it's not a forbidden string, I'll put it that way. And generally there are no strings, but this should be okay.
Okay. There are more questions, but quite a few of them are very specific to that foundation or that company's situation. So I'm going to recommend that if we have not answered your question, we'll give you an email to email us, and we'll be able to follow up with you. So I think that's it. Jeff has done a great job. A lot of questions. I'm going to pass the baton to Christy now, if she could provide some final remarks and wrap things up.
Great. Thank you very much, Paige and Jeff. I know it's a lot of information, and we were able to get through well over 20 questions, so I'm glad we were able to get to so many. Later this afternoon, we will be sending out a recording of this webinar to everyone who signed up and attended the presentation, so stay tuned for that. Also had a lot of questions about the slides, and yes, we can make those available, and we'll follow up with you in the next day or two with the presentation slides as well. Also, if you would like a copy of Foundation Source's COVID-19 Emergency Assistance application, simply respond to the webinar recording email and request an electronic copy of the form, and we'll get that out to you. Lastly, if you have any additional questions, particularly ones that are specific to your current situation or foundation, please don't hesitate to email us. The email email address is info@foundationsource.com. Also, our phone number, 800-839-0054, and we'll follow up with you as well. Thank you for joining us today. We extend our sincere appreciation to all of you and looking, for ways to assist others during this challenging time. This concludes our webinar. Thank you very much.